Welcome back, everybody. Hope you're all doing good. This Friday morning, we're getting ready to head into the weekend. I want to cover what is perceived on Wednesday as well as Thursday. And we'll take a glance at the calendar. So, as I said, Wednesday and Thursday are predominantly going to be the days that you will look to trade, just because that's where the volatility lies in core PPI on Wednesday and core retail sales on Thursday. So 8:30, that's the volatility injection. And nothing for Friday. Let's take a glance at next week while we are here. So next week, not much going on. We have these NAHB housing market index. Not much going on there. 10 a.m. Typical Monday, Tuesday. The only thing we really have is this 10 a.m. housing sales, which that's going to be an injection. And Wednesday PM session, FOMC meeting minutes. Now, again, this is not the smoking gun FOMC where you got the two-stage delivery, one at 2 and the other one at 2:30 p.m. This is just FOMC meeting minutes. So if any good setups are found beforehand, they can be taken. Although, since we have this event coming out on Wednesday, probably you're not going to get the best AM session. But if something presents, you can take it. But it's probably going to be an environment that's going to be a bit more risk aware, I would say, depending on market conditions. But after that has perceived, Thursday we have this medium impact fully fed 8:30. But I'm really focusing on this 9:45 PMI. That's going to be the one that I will probably look for to play in part of a Judas to take out a low or a high, and then we can find a setup off of that. And then on 10 a.m. on Friday, we have revised UOM consumer sentiment. So not a whole lot going on here. I personally think Tuesday and Thursday, perhaps Friday, probably are going to be the days that you will hunt setups. So, get back to the chart. This was that Tuesday setup, which we covered that. If you haven't watched the video yet, be sure to go check out the video. It was actually a really nice setup and it ended up panning out really well. For Thursday, I wasn't really planning on taking anything else for the rest of the week because I got that setup. So I just marked it out and just had a look at it for the sake of completeness and the sake of the video. Let's go through the process. That's Asian low. London high. London high. So stepping into the market, 8 a.m. This is what I was looking at here, and I was like, okay, we kind of got this low here. And the reason why I took this one is this one's the same as this one. Okay, so this one has relatively the same level as this low with a higher low to the right of it. If you look up here, we can compare these guys and see, looking at the low 29,098, 29,097.5. So this one's slightly higher than that one, but it's by such a small margin of error that honestly it's good to go. This is just US 100, it's not NQ. Let's look at it on NQ and see what happened, what played out. 29,203 and a quarter. 29,202 and a quarter. Because this was slightly lower, but that's fine. That's fine. That's, if we're not going to use that one, then there isn't anything that you're able to use here. Then you're going to have to go off the gap, and that doesn't fit the model. Okay, using the gap, then you're using something just altogether different. So that doesn't fit the model in this case. So that's what I rocked with. Okay, I do want to take a look at the US 500 ES. Okay, so looking at ES, US 500, what I loved. Okay, I absolutely, when I saw this, I was like, that's it. I'm going to use that level. We're good to go. Fact that we had this clear low sitting here. Okay, clear Asian low. Clear low. So for me, that was it. That's why I elected and said, okay, I'm going to use that low. It's not perfect, but I'm going to use it because it's the best I got. So I need to work with that. So I worked with it. Okay. Dollar. Boy, oh boy. Dollar index. Wednesday. We pretty much were trading up, taking this high. And then we kind of went into consolidation for the rest of the day, which if we're sitting sideways on that, that's fine. I can work with that. As long as dollar isn't tanking lower at the same time, I'm looking for shorts because that's going to give resistance. Okay, we're not going to get smooth rallies lower. So I was happy with the fact that we took the high and we came into a consolidation. To me, that was great. That was perfect. Okay. That had the stage set up for me to hunt potential long setups. So I watched it, took the low out. Okay, good and great. 9 a.m. I was waiting for this. Again, we got a big bullish candle. Part of the reason why I didn't participate in this trade. Look at the time, 10 a.m. So this closes by 10, so I'm going to have to look for a setup at 11. I'm going to have to hunt something at 11 o'clock to get in. So that's coming closer to lunch. So at that point, I'm not really expecting anything major as far as rally, and it did rally quite decent. But I don't like taking setups by that late. Personally, just don't like it. So that will be it. 10, we get the closure. That's the confirmation. That's the look for longs. Nice and bullish candle. So we then go down and we hunt. Let me just see here, get this thing going. Wednesday. Okay. So this is Wednesday's PA. Okay, you're going to be looking at the 11 o'clock. So you step in. This is what you got. Fair value gap down there. We traded into that. What do I have? Fair value gap, order block, inversion. That's what you got to work with. Okay, that's what you get. That's what you get. Let's close this out. So 11 o'clock. So we're looking for a retrace. Now, again, this is one of those scenarios where you're going to have to look at how it trades when it gets here. Does it want to go deeper in, or is it only going to tap this and go? You need the feedback of the of price action live to see what it's going to do in that scenario. So the best approach is frame the risk on this entry and frame risk on this one. See how it reacts when price trades the level. Does it show you a willingness to get away from the level? If it does, then that's going to be your entry. Then it's not going to want to go lower. But a lot of times they want to tap this level before they send it off higher. Okay. These levels are very close together. So that's something else to keep in mind. Very close together. So you could get price coloring outside the lines and just tapping the lower one and then going off higher. If you look at that, see that right there? Now this is beautiful. This is beautiful. Okay, grab your notepad. Why is it beautiful? When price trades like this and it taps the level. And this is something that happened in Tuesday's trade as well. Price tapped the level. And in my mind, it's like, okay, it tapped the level. Great. I want to see it trade into the level. Just tapping it, that just isn't it for me. It's a fair value gap. I want to see price get into that fair value gap, trade inside of it, and I want to see a reaction, and then I want to get an entry. I wouldn't take an entry off of just this, just tapping and reacting off it. I want to see it go trade inside the level, go to consequent encroachment, and then give me a reaction, and then I'll take an entry off it. But I'm going to take an entry here because what it's going to do, it's going to come down, it's going to trade inside the level, it's going to work the level, then go out of it. So see, trades it, taps it, hangs around. Okay, what does this do? This gets you all anxious because now you're thinking, oh, I missed the trade, I didn't get in, I missed the move. Okay, that's what it gets you chasing it. That's what it does. It gets you chasing it. In my opinion, if it trades like this and if it ends up running, then it can run without me. Okay, then I'll wait for another day, another trade, and I'll take that trade instead. Okay, so what ends up happening, comes right back down, works the level. That's what I want to see. And it ends up trading into this, and it ends up tapping the high of this inversion. Okay, see that? They're close together, so you got to keep in mind that there's a possibility it could just work both of these since they're close together. Okay, but that's what I would be waiting to see. I want to see it get inside the level, work the level. Then I want to get a reaction. Okay, see it work the level, came back into it one more time. This time, notice it didn't get to this high of the inversion. Failed to do so. Okay, to me, this here, that's entry. Okay, depending on how this trades, if it shows immediate reaction, that's an entry. That's an entry. You're going to have some drawdown, a little bit of drawdown here. You're just going to have to sit through it and eat it. Okay. Long position, entry, stop, beautiful order block, fair value gap, inversion. So these are 3 PD arrays lining up. That's clean. That's what you want to see. Stop. This is fine. Order block, mean threshold, beautiful. Target 22% or 0.22%, which is slightly more than 10 handles. Okay. Slightly more than 10 handles. You can do more if you want to. All up to you, but I'm showing you how I would approach it using Jade, Kyle's model. This is how I would approach it. Right? Even not using his model, just looking at a standard entry, this is how I would approach this entry. Looking at it. 3 PD arrays. Where's my target at? Where's my stop at? This is what I would want to see. So you're getting in, you're sitting through some drawdown. Take profit hit. Okay? Take profit hit. So that's a done deal. It's a full pool. Later in the day, it comes back, taps one more time, rallies. If it came back and I had this trade, then that's it. The books are closed. Work has been done for the day. So I'm not going to be sitting here like, oh, it's coming back. I'm taking another entry. No, I'm not putting risk on. Okay, if you banked on the day, done deal. I'm not going to go in there, be a greedy bastard trying to get more. Okay. You banked for the day. The books are done. You did your work. Be done with it. Go do something else. Okay. The less exposure you have to the market, right? The less losses you're going to have, the higher win rate you're going to get. Okay. You want to be trading more, you're going to have a lower win rate because you're taking more exposure, you're putting on more risk. So just some food for thought. Okay. And if I missed this and I see this, then I'm still not going to take it. Because what I personally like is a clean level, a clean base, and a clean level. That's it. If this did not trade into this, then yes, then I would consider this. Absolutely. But because we had that move and it traded, I'm not taking that. That's just it. As far as I go, that's just it for me. You might be different. Either way. That's that for Wednesday. Thursday, let's have a look at this. Thursday right here. So pretty much first thing you have here, You got this low right there. Okay, that low, and yes, you got this as well, which we didn't trade. Okay, but you have it on the chart. You got that low, and then as far as all these highs, I would look at this one. I would look at this one. Lower high, that's valid. I'd look at that. Right? That's how I would have it marked out. This is a London high, Asian high, London low, PM low. Okay? For the sake of the video, I'm not going to be sitting here typing away at all these levels. We're going to do this guy, which was a London low. London low, that's the one that I'm going to have on the chart. You should have all these on your chart. Okay? All of them should be on the charts. Cause price manipulates this. So what can I do with this, this, and this? These are targets. You can use them as draw on liquidity. Okay, see that? Look at that. Bam. Traded right up to this. These are old highs. Old highs, when you start going down your time frames, start going down lower. See, these become relative equal now. Okay, relative equal highs, old high. So they act as targets. Look at this. Relative equal high sitting here. So it starts becoming targets. So it's good practice to have those levels on the chart. Should be having them on the chart anyways. Right. Thursday, 8 a.m. Trades the low, correct. Do I get a bullish candle? Nope. Can I take anything? Nope. So what do I need to do? I need to wait to get this bullish candle. And you're going to have to be patient. You're going to have to watch it trade the low, and it trades up really high, comes back down. That's fine. It closed down like this. Okay, closed down quite low. So yes, it did go up here, and it got up to this. Let's see, high. 29,585. 29,585.8. So it didn't take this out. So what's left here is an equal high. An equal high is sitting up there. So there's liquidity up there. So 9 a.m. this closes. So at 10 a.m. we can go down. Here we are. Let's get rid of that. Let's ignore that. The first thing that you're gonna see here is fair value gap. It's gonna be screaming at you. It should be screaming at you. Fair value gap right here. Look at that. 9:55. So 10 a.m. Okay, 10 a.m. You're gonna see this. Fair value gap. You're gonna go like, oh, I missed the entry. Missed the entry. Okay, first thing. That's gonna be it. Fair value gap. Right there. Fair value gap. Started rallying. Right? You missed that initial entry. Because you're only coming into this, you're gonna see you come in, you're gonna see this candle start as it trades lower, but it never gets back into this. It doesn't go back into this. Right? So it's just one of those where you missed the first entry. If you follow the rules to the T, then you missed this entry. If you don't follow the rules, then you probably got in when it traded here and it started rallying up and you were in the trade by then. Okay? If it trades down like this, I'm not going to get in here unless it trades into this lower. I'm just not taking an entry. Maybe some of you are going to look at this and you're going to say, okay, well, it's sitting inside this fair value gap. It's working inside this one. And you would be correct. That's an entry you could take off of that. You could take that. Long. Where would you be long? You're probably going to be long here. Can I weather this stop? I can't. It's too big. So that's not an entry for me, but that could be an entry for you. This candle, I mean, by the way. It could be an entry for you, and there you go. It's 0.22%, hits that right there. Okay, that could be an entry for you. But if I miss this, okay, I missed that, right? We haven't rallied up like crazy. And by the way, see how that becomes an equal high now? It's obvious, it's clean, so that's the DOL. So if we just give it time, what do we got after we got that close here? We get another one, another fair value gap. We get a fair value gap, down close candle. We could use this one because that's the biggest one. See how coincidentally it just happens to overlap with the consequent encroachment of this fair value gap. If I can grab this, extend this through, grab that, extend that through. See that? So as soon as price does this, soon as it does this, bam, and look at the beautiful reaction. It closed right above the high of this fair value gap, but it would be the low of this candle. It closed right above the low of this candle, right above that price. Beautiful reaction. It tapped the high of this candle, which is the low of this fair value gap. It failed to touch it. We zoom in, failed to touch it. Okay. Beautiful reaction. 1025, it's inside that silver bullet. It's good to go. Good to go. Stop. What do we got here? Order block mean threshold. Okay, well, it's not going to be exactly order block mean threshold, but close enough. Close enough. Okay. If it's gonna rally, it shouldn't trade back down to that level because it's done the work right here. It's done the work. It traded down here and it was unwilling to stay down there. It traded right up higher. And then beautiful, this candle, you're showing some drawdown. Okay, but after it trades lower and it ends up starting to go higher, closes. If you look at it, it's beautiful because what did it do? It traded the consequent encroachment, closed back above the high of the fair value gap, showing you that it's not willing to go any lower or stay down. Okay? In the next one, do we get 22%? 22? Probably not. But we get a beautiful rally. And I talk about this all the time. Talked about it Tuesday. I said, I'm in the trade, so what do I want to see? I want to see the trade show me, okay, price needs to show me the willingness that it wants to get some. It has to show me that it wants to get somewhere. So this is a scenario where even though we had this move, I would take this move because it's a clean level. We're still in a discount. We're s- we haven't we're not chasing it. We're not chasing price. Why are we not chasing it? Because we still have these equal highs sitting right here. That's still the objective. So there's still room for us to profit before it gets here. Okay, there's still enough for us to carve out what we need before it gets to that level. Okay, that's 10 handles. It's more than 10 handles before it gets up here. Now, ICT talks about this. He says he personally does not take a trade if the DOL is less than 10 handles on the trade. You got a bit more than 10 handles here, it's a valid trade. It's good to go. It's good to go. So there you go. It takes out the equal high. It always goes above the level. 5 handles, 10 handles. Depends on the date, depends on the market condition. So there's a couple of things, factors, but usually 5 handles, 10 handles. And yeah, just really depends. Really depends. But you can expect 5 or 10 handles above a DOL. And where does it trade to? Uh, where can you expect it to trade up into? ICT talked about this. Let's look at the 1 hour chart. Let's not look at that. Let's go back. Okay, in this case, I'm not going to be able to give you that example, but where would price go to next if we had an old high? Where would the next logical level be? You're going to look for a fair value gap. Okay, you're going to look for a fair value gap to get traded into. Then you use things like the consequent encroachment, the high. You use those levels as targets. Okay, above this. You use consequent encroachment and the high. Same thing here. If it trades above this, it's going to go to consequent encroachment and high. Now, in this case, we don't have that. So, rule of thumb 5 or 10 handles. All time highs, you're going to have to approach it different. So, that's how you would look at 5 to 10 handles to be safe. To be safe, depending on the conditions of the day. If it's clean, if it's really running, that's what you can expect. But if it's sloppy, it's messy, then I wouldn't even expect anything above the high. I would expect it to tap slightly above the high and be done. Okay, then I wouldn't even be expecting it to go above it. So it largely comes down to what type of day it is, what type of price action we have, how does the calendar look, how does price deliver, is it clean, is it sloppy? Look, it was sloppy here. Then we had what? Then we had the Judas then really rallied, shows you that it wants to get somewhere, but they never took out this high. They left liquidity right there. Nice liquidity pool, equal high. Traded down, sloppy first entry. Okay, sloppy entry here, in my opinion. Nice, beautiful entry here with context behind it, showing you that it's not going to be willing to rally back down lower again because it only traded consequent encroachment, closed above the high of the fair value gap. That is what you want to see. It's like a damn Mona Lisa. You can print this thing and hang it, frame it, and hang it on the wall. Okay, as a trader, print it, hang it on the wall because it's beautiful. The context behind this is beautiful. And anybody else that's not a trader that doesn't know how to view price like this is going to look at that thing and be like, why the hell does this guy have this picture of these candles up on his wall. But to you, this is a Mona Lisa. Okay? It's a Mona Lisa. And in this case, it did rally a little bit higher. One last push. What you could do, okay, what you could do if you enter with multiple positions and you say, okay, I'm taking 80% off you. So then you're leaving 30% on, and you could go for like increments. Increments like, okay, 5 handles. This is 12% is about 6 handles. Okay. So there you go. There's that. That will be a partial that you would take. And then you could go for another 22% right there. So that's probably 11 or 12 handles. You could take something off there. 22. So it's right there. Okay. See that gets hit. That gets hit. And you could probably go for like a 20, let's see, 10, 20, okay, 30 is going to be really pushing it. But I mean, by then you already got a 5 handle partial, you got another 10 handle partial, 10 handle being there. And then if the last one comes back and it just hits whatever stop that you're trailing, like above here, above this. And I mean, you can look at this price action here. You can see, okay, this is really dying down. The volatility is slowing down. It's probably going to start stagnating. What time of day? Lunch. 12 p.m. Okay. So that's where you're really going to start to expect. You really start to expect that. You're expecting this retracement back down. Okay. So maybe you didn't trade that. Maybe you're trading this. Retracement back, fair value gap, uh, move down lower. That's a trade. Somebody could be doing bread and butter. That's somebody else's arsenal right there. They only come in looking to trade this lunch retracement. So it rallied. What's it going to do? It's going to retrace. You can expect it to retrace at least like what? 50% right there. It could retrace 25% of that upper range or half of that upper range. Okay. Half of that range could retrace to midpoint like it did here. It retraced right to midpoint. Okay. That gives you plenty of meat on the bone. If you get in there, you go for 0.22. See, you gives you plenty of meat on the bone. That's a nice little mover. And another trader might just be doing this, and that's all he's doing to make his bank. Okay, that's all he's just looking for this retracement. So if you look at this on a 1 hour, and I'm quite curious now, to be very honest, to see that's the problem with that. Well, it's not a problem. What we got here is Asian high, right? So let's mark that. Asian high. Asian high. See, now that's where the problem comes in. Doesn't trade below this again. Does so right there, but I don't like that because it's not a. I like to see a beefy close. Like, show me that you really want to get below this. Show me that, you know. So it's unfortunately not going to be something that's going to fit this model. But that is something that is tradable. It's something that is very, very tradable. Could be something as simple as a 15-minute high. Took out the buy side liquidity. Time of day coming into play, which is lunch. You expect a retracement. We had a rally. So you expect a retracement of some sort. And that's it right there. That's it. So maybe that's your piece of cake. Really, all comes down to you, what you decide, how you want to trade it. So hopefully you guys have found this one insightful. And until I see you in the next one, good luck, good trading. If you guys are not yet familiar with Vantage, they are a forex broker. You can trade anything from euro dollar, pound dollar, to gold, to US 100, US 500. Platforms they support are MT5, MT4, TradingView. They have an app and they got a web trader. So they are versatile, as you can see over here. MT5, MT4, web trader, an app. So they have a versatile approach as far as platforms, what you can trade on, and a couple of things. Let's go ahead and take a look at the markets. Here you go. There's the markets that they offer. Forex indices, energy, shares, CFDs, precious metals, soft commodities, ETFs, and bonds. Okay. Here are some of the account options here. As you can see, they have a minimum deposit of $50, which is not a lot of money. Now, take a look at some of the pairs. Here you go. These are some of the pairs with the spread. There you go, euro dollar indices. S&P 500. Okay. If you're not familiar with them, check them out. So with that said, if you're looking for an opportunity to make some money on the side, whether you're going to use it for spending, save it up, whatever it might be, the channel has been approached and we have a signal group that we're running on gold. And if you join through the link that's in the description, okay, if you go and you follow that Telegram group and you sign up to Vantage, okay, through the Telegram channel, through the link that they gave us, then you get access to that gold signal group for free. Okay, don't have to pay for it, don't have to use it, but you get access to it if you sign up through the group, through the link that they provide. So if you're looking for a broker, take a look at Vantage, sign up through Vantage. They do also at times run a promotion. If you deposit, then they will give you a deposit bonus on top of what you deposit. So that gives you a bit more money in the account that you can trade with. So check them out, and the link will be in the description as well as on the Telegram and the as well as on X. So check them out.